Washington. The Trump administration has pledged to take a tougher stance toward China's purchases of American know-how in its quest to compete more forcefully with the United States. So few people expected that, during Mr. Trump's visit to Beijing last week, a major Wall Street bank would announce it had teamed up with an arm of the Chinese government to make up to $5 billion in deals in the United States. That deal, between Goldman Sachs and China's sovereign wealth fund, the China Investment Corporation, illustrates the deep divisions in Washington over China's trade and investment practices, as well as the complexities of policing the flow of Chinese money into the United States. On Wednesday, a week after some Trump administration officials praised the deal as one of many that would help American businesses, a congressional commission recommended that lawmakers consider prohibiting entirely the acquisition of United States assets by Chinese state-owned entities, a move that could stop buyers like CIC from reaching major American deals. I don't think any of us expected that easing the way for China to participate in the acquisition of U.S. companies was going to be part of the president's plans, said Michael R. Wessel, a member of that group, the U.S. China Economic and Security Review Commission. It seems directly counter to the policies he was promoting and, quite frankly, the interests we have. The commission, which is charged by Congress with monitoring the security implications of trade with China, released a more than 600-page report Wednesday criticizing activities by Chinese entities in the United States. The deal has also raised eyebrows among some lawmakers critical of China's purchases. Business leaders, such as Goldman Sachs, should continue to try and bring foreign investment and economic expansion into the country, said Representative Robert Pittenger, Republican of North Carolina. Mr. Pittenger has proposed legislation that would broaden the scope of the Committee on Foreign Investment in the United States, the agency, known as CFIUS, that scrutinizes foreign purchases of American assets. We need a strong CFIUS review process to ensure that we're not inadvertently strengthening the Chinese military and jeopardizing our national security in the process, Mr. Pittenger said. China Investment Corporation has long invested in the United States, and a Goldman Sachs spokesman emphasized that the fund would focus on non-sensitive industries that are not subject to CFIUS review. The $5 billion deal was among a package of more $250 billion in business pacts that the Trump administration announced last week during Mr. Trump's visit with President Xi Jinping of China. Most of the deals lacked details or represented already existing business. Still, they showed how important China has become to many companies in the United States. The billions of dollars in deals signed between private U.S. businesses and Chinese entities last week carry the promise of thousands of new jobs for hardworking Americans, said Rod Shah, the deputy press secretary for the White House. Each of them will go through all applicable review processes.